What's up everyone, it's Cowdy with Money Investing. In this video we are going to be talking about my top 3 stocks that I'm actually going to be buying. These are like at the top of my shopping list, right? If these 3 stocks they come down to my fair value, I am loading the boat for these 3 companies. So these are not like companies that you may have never heard of, or these are not like, small cap, mid cap companies, or kind of like hidden gems, as I've already done videos on in previous companies and previous stocks that we've talked about. These are well-known companies, established companies, and a lot of these might really be very appealing to you as well. So hope you guys enjoyed this video, and I'm actually recording this, I'm pre-recording this, so the markets might be open when this video is released, so the price itself might change, obviously. But I hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the binds alerts, options alerts, trading alerts. We've got a wheel strategy starting in April 2023, so next month, and I'm super excited for that. And there is a 16% annual discount that is available for a limited time, so if you want to take advantage of that, now is the time. Link's going to be down below. So jumping over to my famous spreadsheet here. So what I've done is simply go over to the ticker symbol. I've got the company name. I've got the price that it's trading at. Again, this will fluctuate because I'm pre-recording this video. So at the time when it's released, obviously the price is not going to be the same exact price that I have it over here. And I've just kind of included how much it's down from all-time highs. This is a very irrelevant metric to look at. I oftentimes see people kind of judging their investments based off of how much a stock is down. Like, it's down 60%, 70%, so it could be cheap, right? That's not always the case, right? Just because the stock is, trading at all-time highs doesn't make it expensive. This doesn't, just because the stock is trading 40, 50, 60% below its all-time highs doesn't make it cheap, right? So it's all about valuations. I've always tried to emphasize that on the channel, and it's all about the fundamentals. Now, looking at the revenues, earnings, and margins for 2023, and as well as the share count, and then I've also forecasted based on the analyst estimates and what my personal expectations would be from these companies in terms of the future growth for revenue and earnings, and then calculated the fair value. I'm also going to show you what the price target might look like 5 years down the road in case that stock actually gives you an annualized rate of return of 12%. 12% is the discount rate that we're using. That's the level, that's the rate that we almost always use in most of my videos when we're discounting all the future cash flows back to present value. So we're going to start with the first company. And these are, again, remember, these are not like hidden gems or anything that, you may have never heard of. These are companies that make the top 3 when it comes to a whole list. These are the top 3 companies that I want to buy more shares of for the long term. So the first one on the list, of course, should not come as a huge surprise. That is going to be Tesla. Tesla is one of my biggest positions, and I'm looking to buy more shares. I'm hedging as we go, so I do have covered calls sold all the way up to 250s. If it gets up to that level, I'm happy to trim a little bit off. But price right now, $191 down 53, 54%. From its all-time highs, and revenue came in at just over $81 billion for last year, or actually for 2022 is going to be that number. So for last year, and then if we kind of just add +5, there we go. 2022 revenues came in at $81.46 billion. Earnings were just a little bit over $12.5 billion. That's a 15% margin, net margin for the company. And share count stood at just over 3 billion shares. Now, by 2027, right, the expected revenue is a little bit over $202 billion. Analysts are a little bit more optimistic that Tesla can get up to $230, $240 billion revenue. Again, this is a very conservative estimate, right? They can certainly be a lot higher, but this is a lot conservative in my personal opinion, of course. And we've got $11 as earnings per share by 2027. And some of the assumptions that I'm actually making with this is that I'm taking into account a 20% growth rate for the next 5 years for revenue. And then when it comes to earnings, I'm taking into account same margin, same 15% margin for Tesla. And of course, that's also brought back down to the fair value, which is today, which is going to be almost at $11 per share. And my fair value ends up at just a little bit over $120. And that's also very much in line with Professor Demodran's fair value, right? Which is closer to $129, $130. I've actually done several videos in the past about Tesla, more recently though, where my fair value ended up at around 120s, right? 120s to 130s is that fair value. And again, we're using 12% discount rate. I'm actually also pricing in some share buybacks. So I am looking at about 2%. So 2% share buyback over the next 5 year from Tesla. So they are going to be, buying back their own shares by 2%. And that's how I arrive at $124. And I'm also giving it a 20 times PE multiple for the company. So what this analysis is based off of is the fact that revenues are going to be steady at 20% growth. Earnings multiple is going to be 20, and the margins are going to stay steady at around 15%. Of course, if it grows higher, if Tesla is able to achieve higher margins and the growth rate's also higher, this fair value is obviously going to be much higher than 124. But I'm happy to start us off at a more conservative level, and you can always be more optimistic in the future, right? Remember, something that I've always mentioned is that I'd rather be right, conservative and right, than be aggressive and wrong. Because if you're aggressive and you're wrong, that can be far more disastrous than if you are conservative and you're wrong, or if you're conservative and you're right. So that's always the approach that I've taken. And look, if the prices go berserk, if they go absolutely crazy, if it ends up, north of $300, $400, $500, that's great. I don't mind, right? I'm going to own Tesla for the long term anyway. But this is where I'm actually willing to be a buyer of Tesla. That's what I'm trying to, tell you guys in this video. So 124 is where I would be very much interested in adding more shares. And the price target, of course, sits at $219, which may come off as being really low. I get it, but that's also based off of the 12% rate of return that we are accounting for. However, this is not completely accurate. And the reason is because once you account for the share buybacks and the earnings growth, it's going to be closer to 14%. So $240. But like I said, stocks can obviously go crazy. They can go absolutely wild on sentiment. So we could even have Tesla at $500, 5 years from now, or we could have it at $100 5 years from now. So who knows? But this is the fair value that I'm actually very looking forward to. If and when Tesla obviously comes down to that level, I would be interested in adding more shares. So next one on the list is going to be an artificial intelligence stock, and that one has absolutely been ripping. And if you haven't guessed already, it's obviously going to be Nvidia. I do own some Nvidia. It's a very, very, very small position for me. Unfortunately, wish I would have bought more. Could have, would have, should have. But anyway, Nvidia trading at 268, down 22% now only from its all-time highs. And this is on my shopping list, right? It is. Obviously, it is on my shopping list because it is one of the best performing companies. It's one of the most quality companies out there. So absolutely, it makes the list. But of course, the fair value is a lot lower than where it's trading right now. So I do have an alternative. I do have an alternative here, which is going to be Advanced Micro Devices. It's a lot more closer to its fair value, in my opinion. I actually do own a chunk of AMD, which I do have covered calls sold at 100. Happy to get rid of some AMD shares at $100. But AMD is kind of like my alternative to Nvidia in artificial intelligence. I mean, AMD has its own specialties. No doubt AMD is kind of, has its own products and services that it's selling. But if I am really looking forward to artificial intelligence, Nvidia is where one needs to be, in my opinion. But of course, because of that, it has obviously rallied quite a bit, trading at 80 to 90 times earnings, trading at 24 times sales. It's just too high, too much for me. That's why, looking at the forecasted revenue and earnings, it is expected to grow by about, I think, 15 to 17% in revenue wise over the next 5 years. That's going to put us at roughly over $54 billion, coming in from $27 billion to $54 billion. It's pretty sizable growth. And earnings per share is expected to grow to $7.16. I'm accounting for about 1% share buyback, not as much as Tesla. I think Nvidia is going to be very much focused on growth, so they're not going to be buying back as much shares. So I'm only pricing in for about 1% share buyback for the company, and the fair value ends up at about $100. And that's been the case for a long time with Nvidia. Unfortunately, it's been closer to 100, closer to 99, like around those levels. It's been very much at those prices. So that is where the fair value ends up being, unfortunately, for Nvidia. And of course, it can be very much different. I'm pricing in for 25 times earnings multiple for the company. And if you take into account the simple rate of growth for let's take a look at earnings growth here. So 836. Oh no, that doesn't seem right. So $8.36. Or no, that's 8.36 billion. So I have it confused. This is earnings per share. I gotta actually rename that. This is earnings per share, right? And this is net income. Yeah, my bad. I gotta rephrase these. Net income. Yeah, that's why I was like, okay. Net income was $8.36 billion last year on a non-GAAP basis for Nvidia, and earnings per share is expected at $7.16. So if you really look at what the earnings per share was we simply do this. $3.38 was that earnings per share on a non-GAAP basis for Nvidia. And the fact that it's trading at $268, and you look at where the price is, we are trading at 79, almost 80 times earnings. And when you take a look at the growth, right, that we're pricing in, so 50 present value is going to be this right here, and the future value is going to be over here. 16%, right? That might seem a little bit on the lower end, but this is actually the expectations that analysts also have for Nvidia. So I'm actually pricing in 16% with a 25 PE multiple, and then we get $101 fair value. If I go with, let's say, a higher growth rate, like let's just go with, let's just do 25%, and let's just go with a PE multiple, which is closer to 35. Then, even then, you end up sitting at $215, right? It's not until you grow revenue by 30% and earnings by 31%, and a P multiple of, let's say, 36, that you come up to $269, which is going to be very close to the actual price. So in other words, like I said in my previous video, Nvidia unfortunately is priced for perfection, and there's nothing wrong with that, right? I mean, it's just that Nvidia needs to execute and do well and meet with those expectations. If they don't, well, there's going to be some repricing in the stock. That's also one of the reasons why I'm actually a little bit more, excited about trimming some Nvidia this week. I will be potentially selling some Nvidia shares just because it's really overbought, and valuation wise it's really stretched at the moment. So again, it's not until 36 times multiple and a 31% growth rate that we get up to where Nvidia is trading right now. So my analysis is going to stay put at about $101 as a fair value, taking conservative estimates. And remember, these high growth rates at some point they do come down. And AMD is kind of like my alternative right now, and the fair value sits at just over $71. 125 is the price target out 5 years. Again, that may seem a little bit on the lower end, but $6.28 is the actual earnings per share. The price right now is at $98. So right now on a 2027 basis, trading at 15 times earnings. And then if you take a look at what the earnings per share was for last year, which was, let's just do it very quickly. We've got the net income divided by the share count, which was $3.58. So we can just double that. It's going to be closer to 30, I feel like. So let's just do that very quickly. 27.88. So a little bit under 28 is the earnings multiple for advanced micro devices on a trailing basis, last year basis. So that's also, quite reasonable compared to Nvidia's 80 and AMD at 27. I see that as a good alternative. So AMD is going to be the top of the list as well as just an alternative. If I can get Nvidia at close to $100, then yes, Nvidia is definitely it. If I can get more, right? I actually do own Nvidia right now, which I'm planning to trim a little bit. And last one on the list is going to be my biggest idea in terms of what I really want to build a very sizable position in. Microsoft also, unfortunately, is not one of my biggest positions, but I need it to be a bigger position because of all artificial intelligence. That's it. That's the only thesis. Of course, we've got cloud, we've got software, we've got computing, like all that set aside. I think AI is just, I'm convinced that artificial intelligence is the next big wave, and it's not just a hype train, but instead it is actual technology that can really increase productivity among people. I mean, all the interactions that I've had with AI, it's just been on a whole different level. I really do truly see the potential for AI to really take over. And I think there's going to be a lot of money to be made in this space, both as an investor, as a business owner. There's going to be a lot of potential in this space. So $281, of course, Microsoft is the one that got away quite a bit. But $230 is my fair value now. I know I did a video recently talking about Microsoft and how my fair value was upped from low 200s, but I didn't really put a number on there. So 231, closer to 230, 231 is going to be that number, considering a 20 times P multiple. And we're looking at a revenue growth of about 10%. With an earnings growth of just a little bit over 10% and a lot of share buyback. So that's going to be 5% share buyback for the company every single year. And if you take a look at the last year's earnings per share, 978. And then if you do the math here, rate 5, and then we got 0. The present value is going to be this right here. And then we got the future value, 2035. We got a growth rate of 15%, a little bit over 15%. So yeah, Microsoft is definitely going to make the list. 15% growth rate with a 20 times P multiple gives us our fair value of $231 with a price target of well over $400 dollars per share for Microsoft over the next 5 years. So hope you guys enjoyed this video. Again, just wanted to break down the top 3 stocks that I really want to buy. Like these are at the top of the list when I consider like buying high quality tech that is going to be the future. Teslas with EVs and renewable energy. Nvidia, AMD are both artificial intelligence plays, and Microsoft also is a cloud/AI play, which I do think has a lot of potential for the next 5 years. So hope you guys enjoyed this video. Let me know your thoughts on these companies and where do you stand with all 4 of them. Let me know if you actually do own all 4 and which one would you put at the top of the list for the best performance over the next 5 years. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below. Can't wait to read the comments. The comments with the fair values are definitely going to be super exciting. Can't wait to read them. So as always, happy investing. I'll see you all in the next video.